Crisis makes fortune.
It's painful but clear.
I have some kind of conspiracy theory in my mind.
Warren Buffett is sitting now on the highest ever cash that he had.
Making the people rich.
Some people I know lost 100, some people lost 200, $300,000.
Losing money, no one loves that.
Invest now, invest later, or staggered approach. There are two schools.
بس تنويه هام قبل ما نبدأ خلينا نأكد إن البودكاست ده لا يمثل أي شركة أو مؤسسة، بل يمثل فقط ضيوفه كأفراد مستقلين، وبنحط خط تحت مستقلين، لذا وجب التنويه. يلا شدوا كرسي وهاتوا ورقة وقلم وكرركم أخضر.
بناء على طلب الجماهير الحلقة دي دنت بلان ان احنا نعمل لها ريكوردينج وبناء على طلب الجماهير، بناء على مستر ترامب واللي بيعملوا فينا وفي شقة عمرنا اللي بيروح قدام عينينا قررنا ان احنا نعمل الحلقة دي. We have in this episode guys two gurus in financial sector, in financial and coaching and financial advisory. So we have here that I know them personally. One of them I know them since many years, and the other one, Balash, I got to know you very recently, and I was impressed with the knowledge that you have. Ahmed Saleh, أهلا بيك. Balash, welcome to كاريرك أخضر, to my podcast. I'm very proud, guys, to have you. It's a great opportunity to have this power, a lot of brain power in one room. We have Ahmed joining from Geneva. We have Balash and myself now here in Frankfurt recording this episode. Balash, in one sentence, what is going on in the recent 2 weeks?
I think the market is going crazy. The stocks are all-time low, for example, from the past few months. And it's amazing to see something can happen so quickly. And some people can really affect the market in a such strong way that it can impact the global economy. That's what I say.
Okay. Saleh, in one sentence, how do you describe what's going on?
It is very much, as Balash say, it is crazy. What's going on right now is like I think we've seen it in the COVID 2019, and then we've seen it in 2008. So I would say it is similar to these two incidents. It is really going all around the world and is hitting all the markets. There is no one escaping from this. It is very much unique. We are living in a very unique time right now, but I always would say one thing: crisis makes fortune. So we are living in a crisis right now, and crisis makes fortune. So let's talk about it more in the episode.
If I want, Ahmed or you, Balash, if you want to compare, I start first with Balash and then we go to Saleh. How you compare it to the 2008 crash or the 2020 crash?
So in my opinion, 2008 crash was quite predicted because the financial economy was not that stable. The banks were almost crashing. So the US market was on a verge of crash that time. 2020 was pandemic. So everyone was hit by that. Business was down, economies were not running. So it was a pandemic kind of situation. Right now, what I see is, of course, a crisis, but it is, let's say, a man-built crisis which someone has bring to do the trade war. Of course, there are a lot of things that are going behind. I have some kind of conspiracy theory in my mind, which I think it is going on in current times, which maybe making the people rich who are already participated in the US elections, what I feel about currently. But yeah, it's more of a conspiracy than being an actual fight.
We will come to this because we saw Mr. Elon Musk, all the money that he made after the election, he lost it almost. So
we will see.
We will see how it will continue.
Yes.
But so for you, Ya Saleh, if I want to build on this just very quickly, do you think the dip will last like how it lasted in 2008 or 2020?
Yes. I think we have, like, let's agree first. We normally have correction in the market. This is a normal cycle of the stock market. we go up and then we go down. And it's normal that we have a 10% correction or we go through a bear market like what happened in, for example, 2022. We had a bear market, right? 2018, again, the same thing. We had a correction and then we have a bear market. That's normal to have. But what we are seeing right now is that the scale of what we are seeing right now is similar to what we had in COVID and similar to what we have in 2008. Why is that? Because this is something that is affecting the whole world.
The whole world.
Trump, when now what he's doing, he's not like going and imposing tariff on one country.
Yeah.
He's imposing tariff in 180 countries.
Yeah.
So this is affecting the whole world. And the thing is that when you see a recession, when you see like a correction, it's normally like affecting one market. And if it's affecting
one sector or one business
or one sector or one country or a couple of countries, but this one, I would say it is very much comparable to 2008 and to the COVID-19 because it's affecting the whole world.
Yeah.
In 2008, we had a 56% reduction from the peak. In COVID, we have a 35% reduction from the peak.
Yeah.
This time, we are seeing that today, and we are still not done yet. Even with the reversal that he made this week, we're still not done. But from the peak, we're seeing that the Russell 2000 is down 25%.
Yeah.
Nasdaq is now 19% down from all-time high.
Yeah.
S&P is down 14%. Dow is down 12% from. So we are seeing now, and we're still not done. We are seeing like it's going down crazy, and it's affecting the whole market. Europe is going down, China is going down, Japan is going down, Asian markets, everyone is going down. The Gulf is going down, Egypt is going down, Dubai is going down. So it's affecting that's why I'm saying it is comparable to what we are seeing, what we have seen in the COVID and in 2000.
So you think we are staying this dip, we will stay for some time. So like 2008, we will stay maybe 6 months, maybe a year.
Well, let's give them some data. In 2008, the recovery took about 5 years. About 5 years.
Yeah.
We went down like in a verge of like 6-7 months. So it was not like instantaneous.
Yes.
In COVID, we went down in 2 months.
Yes.
But then the recovery took about 4 months after that.
Just to build on this, because the same drop for COVID, I thought it was more toward the 2008 model versus the 2020 model versus the 2008, because the drop was very steep. We dropped all of a sudden over 2 weeks, 20-30%. It depends which sector. The portfolio for the entire, I don't know a single person that his portfolio was not wiped out with the 20-30%.
Correct.
So,
but let's differentiate between two things, Mustafa.
Yeah.
So we have the dip going down, and then we have the correction going up.
Yes.
All right.
Sorry, maybe Salah, to explain, because you mentioned this couple of times, what is the difference between bear market and the correction?
Okay. So the correction is 10. The definition of correction is 10% reduction from the top.
Yes.
Okay. This is a correction. And this has happened once every 3 years, once every couple of years. It's normal. It's happening in all the market. The bear market is when you go down to 20% from the all-time high or from the peak.
Yeah, for everybody who's listening or hearing us, it's the margin that we are talking. If it's within the 10% reduction fluctuation, we call it a market correction. If
Correct.
It's something dipping up to 30%, we call this
20% and more. We call it a bear market. Because when this happened, it will normally be accompanied with a recession. And it will have an effect all over. So in both cases, in COVID, we had the bear market, and in 2008 we had the bear market. But let's differentiate the two things. Like the drop is happening so fast in this in COVID. It took 4 months. In 2008,
a bit longer.
It took about 1 year.
Yeah.
But the magnitude was huge. It was 35% and 65%. Okay, the magnitude was great. But the difference is in what? In the recovery. In the COVID, we found the cure. We found like all the companies got the cure, and then the market started going up directly because it was just related to the pandemic and to the lockdown and so on. So we recovered directly in few months. We recovered. but the effect of 2008 was huge.
Yeah.
We didn't recover until 5 years later.
So this was the question, ya Salah. Is it more 2008 or 2020?
In going down, it is both.
Okay.
It is going, but recovery, I think it will be 2008.
2000. So you are saying it will take we are not talking a month time, we are talking years time.
We are talking years time, and that will take us to that people are trying to catch the dip and trying to say, oh, the prices are very good. Let's jump in. No, guys.
Coming to this. This is my next question.
It will take time. Don't worry. Take your time. You still have time to go in the market, because it's gonna take time. The damage that happened, Mustafa, is huge.
Yeah.
And even if you go down now and we say let's correct it, we'll cancel it, the damage is huge.
Yeah, I know. Please don't. So Balash, if I build on what Ahmed is asking, then the question, impact on individual investors. What do these market changes mean for everyday investor on their savings? And I want to distinguish between the regular the trader versus the long-term investor. Because and that's why we are bringing this in my podcast. People like whom are individual, getting salary, getting every month part to pitch in to buy stocks. Those are most of the time they don't have the knowledge to be a trader, so they are more of a long-term investors. I want if you can briefly say what does this mean for an investor and or a trader, and what does this mean for a long-term investor that is not like in my case, for example, not a good trader. What this market changes means.
So there are few things. The market scenarios are changing. So for example, the regular trader, of course, they have been affected the most. Yeah, but they have also made a lot of money in the past. So they know that these kind of things are coming. So they are used to that. Of course, losing money, no one loves that. Yeah. But of course, they know that it is the market and it behaves like this over the few years of time. So it's common for them. They understand the market scenario and they know that we're going to lose some money, but over the period, we're going to make more money out of it.
Okay.
Yeah.
Okay.
So they will write the corrections.
This is for the traders.
This is for the traders.
For the long-term investors.
I think, of course, they will see, even I do long-term trading and I will see most of my shares or most of my funds are in a negative currently.
Yeah.
But I think this is also an opportunity. While when someone is going into a long-term trading scenario, I would always say maybe take 10, 15 years down the line as an approach. Don't take 2-3 years. 2-3 years is even riskier. So if you are taking 5, 10, 15 years down the line as an approach, I think that's fine, because even if you see that my shares are right now 20% down, that's fine. Keep putting money in that. Maybe I will put more money in the market now, and if the market is going down again, or maybe there is another dip, then I will put a little bit more money. But of course, I will also be on a safer side that I don't put that much money. Firstly, I will not leverage my debts. Yeah, I don't take money from the market and invest. That is not the right strategy right now. I will invest only that money which I think that I don't need it for the next 5 years or 10 years.
Yeah.
I will put a certain part of that. Then maybe if I see another opportunity in the next maybe few weeks, when maybe Trump makes another decision and the market goes another few points down, I will take that opportunity and maybe put some more money in the market. So I think it's an opportunistic approach, but think long term, 10 years down the line, maybe 5 years down the line, but put that money which you don't need it.
Because you don't need it. I want to underline this word, guys.
Exactly. Yes. Because otherwise what you will see that people start doing panic selling.
Yeah.
And panic selling is never good in this kind of market, because you think that market is going down and then you start selling the stocks and then you will end up booking the losses.
So, yeah, clear. It's painful, but clear. Saleh, anything to add on this one?
Yes, I have a couple of points to add.
Please.
So first of all, for the traders.
Yeah.
For the traders who are like buying for the, like we're saying, they are going long. They are buying and making money from going long. They are out of the market already. Like we are out of the market since mid-February because the market was going down. There was some indicators that the traders will use that will tell you that the market is going down. And we've seen this in January, in February. And we have, like, the traders went out since mid-February. Okay. Now, what is in the market now? are the traders who are shorting the market. So the traders can make money while they are going long when the market is going up, and they can make money when the market is going down. They are making money. So the traders who are going long, they are out of the market since long time ago, since a couple of months. Now the traders who are in and who are making money are the ones who are shorting the market, because we are seeing that the market is going down, and there is a way to make money when the market is going down, and we are making the money when the market is going down. So these are traders, and there is no worries at all on the trader. Okay. Traders, they know what they do. They go into the trading, they put a stop loss, they know when to go in, when to go out. There is no worries at all on the trader.
They are regular
Where
people, yeah. Regular people like me, like the regular people that are getting salaries that are not traders.
Exactly. This is where the issue is.
Yeah.
If you are not into trading and you are investing and you are a long-term investor, this is where the problem is. And here we have two kind of like people like who are working in a corporate or multinational companies. There are two kind of investing. So the first way is that the way that was explained now by Balashu, who is saying like this is what is called dollar cost average. Like every month, you are investing a few amount over the long term, regardless if the market is going up, the market is going down, the market is up, down. You are investing, like for example, the incentive program that is given by the corporate companies to make the employee as a shareholders in the company. Most of the companies are doing this. The multinational companies are doing this, and they are giving the employees a share on the 25th of the month. They are getting shares, and they are investing in what we call dollar cost average over a long period of time. And this is the first way. The second way is that we have some people like you or our friends. They are putting lump sum of money. They are buying with $10,000 in a stock, Microsoft or Nvidia. So these are the two ways that the normal regular people are investing, and this is where the worries come. There is the textbook that the people are saying that invest for the long term. They think that Warren Buffett is holding his stocks forever, and this is wrong. Because Warren Buffett, what did he do recently? He sold Apple. He sold Bank of America. Warren Buffett is sitting now on the highest ever cash that he had.
Yeah,
But unfortunately, our people, they have this wrong. They keep the stock forever, so that they keep the stocks, and they are the most people that got hit by this. And
very painfully
so far they lost like 20%. So there are two schools or two strategies. One strategy, the textbook strategy that says keep investing on the dollar cost average for forever. Okay. But there is another school that I lead and I teach in my courses, which is saying like, when you see the train coming in front of you, don't stand in front of it. Just get your money out and go out. Okay. And when things calm down, start to go back again.
So Salah, this takes me to the next question, and then to build on it, I'll pass it to you, and then we go to Palash. Protecting savings. So now with the bleed is there, the damage is there. Yeah.
Yes.
So for the people that on the long term investing, I'm talking the damage is there. Some portfolios, I know people lost. I don't scare people, but some people I know lost 100, some people lost 200, some people, I'm talking average people, I'm not talking filthy rich people, $300,000 and so on. Protecting savings. Question to you, Salah, and then I go to Palash. What is the immediate steps that should individual consider to protect their financial assets during this crisis?
Very, very easy, and everyone should do this now. As I mentioned, now we are down between like 15 and 20% on most of the indices, which means that the investor has lost more than this.
Yes.
They lost probably around 25, 30%. But again, if we compare this, I'm sorry, I'm going to be a little bit pessimistic here. If we compare this to 2008 or even the COVID, 2020, we still have some way to go down even further. Okay. So what I'm advocating for, stop the bleeding. There is no way to take that. There is no need to take that pain. Just get out.
Even after the damage happened.
Even after the damage happened. Why? Because there can be more damage happening.
Okay. So
in 2008, it was 56% down. We are now 20%, so we still can have more damage that can happen.
20-30% more. This is what you're saying. It can go
Exactly.
even further.
It's the same in COVID. Okay. So what I'm saying, if you see something like this, you don't have to take this pain, especially if you are, for example, approaching the retirement age. If you are going to retire in 5-10 years, because based on what happened in 2000, it took time until just you take back your money. Okay. But if you take your money out, and then when the dust settles, you go in again, then you protected your capital. Even if you took your money out and the market went up, you protected your capital. You didn't lose anything. I know this is against the textbook, and this is against don't try to time the market, but I think with people who are working just normal corporate job, they can easily see what's going on. They can easily see what's happening.
Sarah, from your perspective, stop the bleeding, get the money out.
Stop the bleeding.
Stop the bleeding now. The market you're expecting 2008 or 2020, whatever it will follow, it most likely still the slippery will continue, the bleeding will continue. Palash, exactly. What do you think protecting savings? Which approach you would go?
I'm not specifically talking about the current market scenario now, because as he already given a perspective that maybe stop bleeding. That is one perspective. My perspective is always from the beginning itself is diversification. Of course, on one side, there are chances that my stocks portfolio, my bonds portfolio is down. But if I have diversified my investments in gold, for example, or into real estate, which is appreciating well, so I can still have a leverage there. And I know that even if it goes further down, maybe the other part of my investment, the gold, for example, instance, is growing. So I can stabilize my losses there.
Yeah, but sorry, Palash, but for the interest of the question, to make sure we are clear, but for the part related to Tsunami, of course, so diversifying the portfolio, looking to the bigger scheme, this makes somebody has, at least they are stable financially. But I'm saying for the part related to the sector in your portfolio, that's fund, the ETFs, individual fund, bond related, the question, you stop the bleeding or you keep the investment and let it go as it is, considering that there are other sectors in the portfolio?
Yeah. So if you take my own perspective, this is not an investment tip, of course. I will keep my investment retained in the market, and maybe I will invest a little bit more money on different steps.
But not on the stock market.
No, of course I can go more in.
I will come to this question, but you are in the school of don't time out the market, keep the stocks,
yes,
and focus on the other part of the portfolio.
I will keep my portfolio. I will keep my stocks portfolio, and if I have a possibility, I will put a little bit more money in that.
Okay, I will come to the investment opportunity, but one guy's point of view is that stop the bleeding, other market, don't time out the market, and continue the investment. Then this will take us to the next question, and I'll start with you, Palash, and then we go to Saleh. Investment opportunity.
Yeah.
So what you were saying, do you believe that it's a time of invest, or the dip we didn't reach the bottom now? We will bleed, still continue bleeding. How do you see the coming opportunity? Invest now, invest later, or staggered approach?
I will say invest in steps.
Okay.
As I said, I will invest something now. If someone has not started investing, they can find this opportunity and maybe start investing with some amount. Yeah. And if someone has already taken the hit, they can still maybe wait for another few days and see how the market is performing, how the scenarios are changing. If China is putting another extra tariffs, they have already put like 84-86% tariffs on US. So of course that scenarios will change, but there is the opportunity. Maybe I can invest in the market who have now the potential to grow, like UAE or India, because these markets will grow, because the investment and the production part will move from, let's say, big bulls.
Now you're talking about the tariffs.
I'm talking about the tariff.
Because of the okay, we have a part for this.
Yes.
But for now, you are saying invest. Any specific sector you recommend?
We can go into, let's say, AI. AI is booming currently. Also, health sector is a requirement currently. And then if you want to put in some physical assets, then gold and real estate.
Good, gold and real estate. Saleh, question to you again. So we take the same question. Investing opportunities. So I understood what you are saying, that no, we stop the bleed, we wait the market. Do we do any investment now, or we hold our horses?
Yes. So number one, cash. Cash is king. Cash, when we have such scenario, when there is a crisis in the market, cash is king. So we have to move some of our portfolio to cash. All right. So this is number one.
So you mean that you hold the money, I don't get into the market yet?
Exactly. Because when we talk about tariff, I'll tell you why I believe that we are not yet at the bottom. Okay. But let's keep this to a separate discussion.
Okay.
So number one, keep in cash. Okay, so this is the first thing that you have to do. At least get something out. Get 25, get 30%, get 50% out. If you still don't want to liquidate, you are not able to take your losses and get out, at least get something out, just so that you have the cash that you can invest later on. Okay, that's number one.
So, sorry, Salah, for being picky, but just to learn as well. When you say 20-30%, this is number intentionally you are saying? So try to liquidate 20 to 30% of your portfolio, have it as a cash? This is what you say?
Okay. Yes, if not all. I'm advocating to go out of the market.
Okay,
I'm advocating
100%. Sell everything.
100% out of the market, because first of all, Trump is not... you cannot forecast what Trump is doing every now and then.
Ahmed, sorry, it's really, I know, but sorry, yesterday the market got a quick recovery, and Nvidia went up by 15%, if I'm not mistaken.
Correct.
So if somebody did, and yesterday it got dropped again. I don't know when the market opened today how it would be, but for example, it would have been a big loss if I sold yesterday, for example, versus the loss that's already there. This is what I mean.
Yes. So let's agree on one thing. When we have a bear market like what we happened in 2008 and 2020, then there is what we call a bear market rally. What's a bear market rally? That when at certain points of time the market will go up again. There is a reason for this to go up. Like yesterday, we've seen, or the day before yesterday, we've seen that Trump announced a hold for 90 days, and then the market went
immediately.
up. Immediately. But are we out of the issue?
No,
of course not. We are not out. So this is what we call, it's a bear market, but there is a rally in the bear market, but the general direction is downward. Okay. So the bear market, the rally in this market, the bear market rally, is a golden opportunity to go out. So you had a chance to go out the day before yesterday. It went up by 10%. Stocks went up by 15 and 20%. This is a chance to go out. What happened yesterday? We corrected by 5% in the market, 10% in the stocks. Okay. Now, but this is like in 2008, we had 5 bear market rallies. 5.
2008.
Yes. So you are saying that, okay, I would have lost the 10% that happened the day before yesterday. Okay, that's fine. But if you stay in the market again,
you will lose more.
You will lose more because the market is going down.
So you get the money out, just get the money out.
And use the bear market rally to get the money out.
And wait, and no investment at this point.
And no investment. Don't go to a sector, because everything will gonna be affected, whether it is like technology or utilities or it's gonna be affected. That's what happened in the recession, because the consumer will not have money to spend. Then every sector will be punished. There is no way to hide. You can save on gold. You can invest in gold at this time. Why is that? Because gold is a safe haven. The gold went down a little bit in the last few weeks, because there were some people who were having a margin call. They had to liquidate the gold to answer these margin calls.
When you say gold, Salah, when you say gold, physical gold or ETFs gold or stock market gold?
ETFs gold.
ETFs gold, not physical one.
No one is now using the physical one, Mustafa. The physical one has some issues because you have to go to buy it. There is a security issue, or if you keep it in the bank, you have to pay some insurance, some fees for the bank, or you
في
keep it
ناس
at house.
كيفة سبايك لسه في ناس
There
كيفة
is,
سبايك
yeah, but this is like for if you are like going to keep it for a long time. But now you
Okay.
have to you have the gold. You can buy GLD ETF. And silver, you can buy SLV, and this will give you the flexibility. With a click of a button, you buy. With a click of a button, you sell. You see the transparency of the prices. So, but nobody is like buying like the
Yeah.
physical gold anymore. But again, to summarize, cash, gold, and
out of the market for the stock market.
out of
Okay.
the
And
yeah,
I know,
from
Palash, you have a different. You are in the same camp when it comes to the gold, but you are in a different perspective that you don't want to take the cash out of the market, keep the loss. It will get leave the pain for now.
Yeah.
Okay. Very
By
good.
the way, Mustafa, I have a respect to what Palash you say. This is what is textbook. So it's let's agree that there is no one way.
Yeah.
What he's saying is right, but what I prefer: protect your capital. Don't be in the market now. Get out.
Okay. Before we go to the tariff part, guys, because of the time, what is the common mistake? I'll start with you, Palash. The common mistake that you ask the people sincerely to avoid.
In this time, you mean?
Yes.
Of course.
In a time when there is this volatility in the market, what is the common mistake that you ask people to avoid?
If you don't have the knowledge, don't try to act smart. Yeah, you think that you can maybe buy some stock and overnight it will go up 15% in the rally and you will sell it and make money. Don't try to do that right now. Secondly, don't take leverage, don't take debts. If you have some money which you can leave for some time, even if it goes down, do it. Otherwise, don't do investment.
If somebody have already leverage, what does he or she do? Leverage mean, guys, that somebody is taking money from borrowing money from the bank and putting it in the stock.
Yeah, leveraging is never good for such kind of markets.
No, I mean if somebody has the leverage now.
Yeah, then maybe they have already did a big mistake, and now let's say the portfolio is 30% down, and they have to pay back also after certain time. So they will losing their 70-80% of the portfolio in some time, because after some time the bank or the leverage giver will come and say that I need my money back. Now is the time, or you pay interest on that.
Yeah.
So I think they did already the mistake to do that. If the market was going down, they have to, of course, as he said, that they have to get out of it so that they can at least secure their wealth, and also they can repay the debt, because now it's not the good time to take the debt or use that to invest. Even if you want to invest and you don't have the knowledge to invest, maybe go into let's say the bonds, for example, which are actively managed by fund managers, in my opinion.
Yeah.
Because if at least there is someone who has some knowledge of the market, and they will be doing better than what I can do if I don't have the knowledge.
Okay.
So go for bonds rather than going yourself. ETFs, I still am not the fan of ETFs because they follow indexes and the chances of getting into losses. I believe a human interaction and a human person sitting behind the screen and managing my portfolio will be in a safe hands than going into a AI program or something.
Agree. Saleh, in your perspective, what is the common mistake you advise the people to avoid?
The common mistake is that there are two things, and they are two extremes. Number one, people are getting greedy, and when they see prices like this, they jump into the market and they buy, thinking that the price is good. Like you can see now, Nvidia is 85. Wow, this is a dream. At 95, this is we were waiting for this for a long time.
Below even 100.
Yes, it's a dream. Like to see prices like so. And I recall what I did in 2008, where I had a huge losses at that time. I started in the market 2004, so I only had 4 years experience. In 2008, what did I do? The market went down by 10%, I added more. The market went down by another 10%, I added more. And then I finished my money. And then the market dropped after that by 40%. So I stayed in these huge losses for 5 years until just I made a break even. So this is a big mistake that can happen, that you are, when you see something like this, you go and you buy, and then you go and you buy again, and then until you finish your money, and then the market will go down. So this is the first, that you are very active and you are very greedy. So the other mistake is that you can, that people do not do anything. They are fearful. and they don't do anything. You see the train coming to you, and they just stand still, don't do anything. Just make some changes, get some money in cash, put some money in gold, all right? Sell something, But being in this situation is something good. You get pain, you have to react out of that. Okay.
Okay.
So that's a second mistake.
Okay. So I think if I want to wrap up, we are two schools. What we are saying, guys, just wrap up the part related to the stock, and then we move to the tariff and whether there's an opportunity there for the people who are doing startups. I want very quickly to summarize. From Saleh perspective, it's a 2008 style. It will take some time. It's not, and I think you agree on this, Palash.
Yes.
We are talking that we will enjoy, we will have some fun. It's not, we are not talking a month. We are talking something beyond this. There is one school saying, get out of the market completely, stop the bleed. Like Mr. Buffett, this is how it is today. Enjoy, have fun, have the money, be able to sleep at night. And then once the train starts going up again, we join the ride that's going up regardless, but at least we have peaceful sleep. What you were saying, Palash, to summarize, the pain has there already. Diversify the portfolio, go into the gold. Don't get out of the market. Don't try to time out the market. It will not work. Get into the gold, get into the real estate. And we just need to watch what is going on the stock, but get diversified in the other portfolio.
Exactly.
Okay. Ahmed, you said keep the cash. We will do it later. The dip is not yet there. It will take some time. And then when we see that we're reaching the rock bottom, which seems that we will still have some fun, you can start get into the market again.
Yeah.
Okay. This is the summary. Okay, very clear. Then I go, guys, for the last 15 minutes of the podcast, I go quickly for the startups. So with this tariff, what happened in the market? So we have 180 plus country with different horizon of tariffs, 10% up to the dearest China. Now we are crossing the 100% in some stuff. How you think this will be impacting the global market and the investor confidence in general? But how you think from this tariff impacts? We saw it's already killing, but how do you think is it a time thing, or again, nobody knows, it will take so long or so short? I start with you, Palash, first.
I think there will be two type of businesses that will start growing here. Firstly, companies probably try to go back to US, for example, and start doing there. But of course, there are challenges. The labor market is not that amazing there. They have to pay more salaries. And of course, the cost will not be as good as if they are producing in, let's say, Southeastern Asia countries or something. And on the other hand,
companies went out of the US for a reason.
Yes, exactly. So maybe if they are playing the game that I make your products expensive, but on the other hand, in my country, everything will be expensive. I am on the verge of inflation and people don't have jobs. Of course, they can increase the production, but it cannot happen overnight. So they need some time to do the corrections, but they cannot make everyone their enemy for that. So they could have done it in a smarter way. Yeah, but as I said, I had a conspiracy theory in my mind that something is going way beyond in our general understanding, which these people are playing the games and making their friends, because they have invested hell lot of money in the US, let's say elections, for example.
Yeah.
So they are recovering those kind of stuff as well right now. So they are making their friends richer right now.
Do you think sorry, because we said we will talk this, sorry for cutting. Do you think that Mr. Allen is regretting it now?
I don't think so. I think he's a very smart person, and the things that are happening right now in the market, maybe they have already planned that, because they know, they have financial analysts. They know that if they do some things like this, what will happen. And if
his stock market, his Tesla stock was at a certain point after the election it taught again the $400. Now it's again in the 200 something.
Yeah, but exactly, but it doesn't he doesn't care about it, because maybe he has made a lot of money on other stocks and maybe other places which we can't even imagine about, and there can be zeros which we cannot even plan to read about.
Right.
So that much money they have already made out of it, and they are planning to make more. Secondly, the startups, what I think are the future, for example, right now are probably the digital startups. They don't need a lot of money and a lot of investment in their leverage, who can maybe build on AI, for example, or using clouds, so that they have less assets, not assets, less leverages, that they don't need a lot of money to run, and they can maybe run in countries like, for example, UAE, where the taxes are low, and they can even have maybe a hub in US, for instance, and grow there.
So, Palash, you are going to the second question. So, you are recommending startups for the electronic or the digital startups,
Yes.
where they can go and scale up in a lot of countries with much less overheads.
Exactly.
Okay. Saleh, for you, the tariff impacts, you think how this is impacting the global market and the investors' confidence first. So I understood what you said, but I just want to summarize it quickly for the tariff impact.
Yes. So let's agree on one thing: crisis makes fortune. Okay.
Yeah.
So what happened in 2020 when we had the COVID, you can see that, for example, Zoom was flourishing, the medical companies were flourishing. So crises always move wealth from one category to another category, from one person to another person. Okay. So the smart one who are going to get benefit from the crisis that is happening right now.
So you recommend a certain sector?
I recommend basically that first, there are countries that has a high tariff, and these countries that the business will be now relocating from these countries to the countries that has lower tariff. So, for example, the countries that has 10% tariff, like, for example, Egypt, for example, you will see some of the business migrate from the high countries like China and going to Egypt. This is a golden opportunity. This is
and you think he will not roll back these tariffs, Salah? You think he will not say it today because of he's the negotiator and he's not posing this discussion to push or to force a certain
Yes.
certain tariffs, and then he will start pull back? You think this will really move investments from, for example, China and push it to Egypt or to Israel, because Israel, for example, is 17%. So do you think it will push to a la Egypt and similar markets?
Yes. So let's agree on his Trump original what he's thinking. Trump want to make America great again. Okay, and he realized that by giving the factories and putting them outside of US, he realized that he's losing a lot of power. They do not produce anything now. Even the hat that has the Trump, make Trump again
Yeah,
is
it was
made
fun.
in China.
Yeah.
Is made in China. So a lot of things now are made in China, and this is becoming a national security issue. So he realized that the previous strategy, having the manufacturing sites at the cheaper countries, is a national security issue. And he want not only to, it's not about covering the deficit in the trade or covering the deficit in the budget. It's about bringing America great again and getting the manufacturing site back to US, which is going to take time and going to take a lot of training to the individuals. But this is his final objective. So I think he's not going to go back. So this is my belief. He's not going to go back. He's going to stay. Maybe he has some deals with a friendly country like Vietnam or Japan to produce some stuff there. But he's intentional about getting the manufacturing site back to US. But with this, he cannot get everything back. So he's still gonna have some manufacturing done outside, but not in China, because China is as you can see, it is retaliating, and it is making a lot of issues for him. So he wants to put it in friendly countries like Egypt, for example, and other countries.
For people that might be doing an investment, so for example, which sector again you are recommending that they can do if a small startup? So Palash was saying, for example, for the digital stuff, could be in UAE, could be because it's easy to scale and lower overheads. Which sectors do you recommend if somebody wants to do today startup that you believe it's a golden opportunity to go and go in this sector?
Look, Mustafa, there are US manufacturing now 10% only of its needs.
Domestic consumption.
And a lot of things they are manufactured outside. Okay, the opportunity is huge. It's across everything. It's across a lot of things. Okay, so my like my thinking is that we should see what is produced now in China, because this is the main country that is making impact. What does China export to US? Go to these industries and localize this in the countries like Egypt and the other countries that are like
having low tariff.
having low tariff.
But you believe
he will not be able to get it all back to US.
And you think that these tariffs are real, will live with us? It will not something
Yes.
that get imposed now for the sake of negotiation.
It's not a negotiation tactic. It is there so that he moves the plants out of China and he moves the manufacturing back to US again.
And
He
Palash,
won't
you think the same? Palash?
I think it's also more about let's say reducing the stronghold of China in the world, for example. So US has their own let's say friends in different countries. So he wants that he should have more friends, and the China should have a lower let's say impact on the global economy, which he's showing in the aggression right now by putting more tariffs. So he's showing that I am, let's say, the bigger bull here who can fight with US and no one can stop me. And that's what they want to abolish. And of course, it's an opportunity for many countries to, let's say, acquire this opportunity and start what China was doing already, but in a better way. Like, for example, instance, Japan. Yeah, they are sweet people. Yeah, they don't want to fight with everyone. They just want to work in a nicer way. So there can be countries who can take the benefit, and of course I think that's what US is also want to do. Of course they are also doing the corrections, that the mistakes that have been made in the past, that making one country so strong that they can fight with everyone. But I think that the whole economy will change now. Yeah, because people know that US on the other hand is also very strong, and they want to, let's say, hold the market. And on the other hand, China is also there, but there are players who are emerging. Yeah, and let's say powers will be distributed all over and opportunities will be there.
Okay, and then last question, guys. For any startup, they go global or they go local focus? So should new business prioritize to go for local markets, or is it the merit now of these tariffs they start local on a global scale to reach out somewhere else? You think this is the right time or better to play local?
It depends, Mustafa, on what is the scope of the work that they are going to do. If it is physical work, it has to be like the production has to be local. But of course now, like with the new tariff system, there is tariff all over the world, and we might see some countries also imposing tariff on each other. So we might see that in the future.
Mm-hmm.
It is not the end between like it's like only China, only US, and the rest of the countries. This might has another replication. Trump is disrupting the whole trade system worldwide.
Yeah,
he's creating a new trade system. So we are not sure yet what this trade system is going to be, and which country is going to impose taxes, a tariff on which countries. Okay, but again, like for now, what we see is that if it's a physical product that is going to, for example, move from China to another country, then this can be like a global thing. No one now is working only on just local customers, especially if it's related to with all what we have in the internet and so on. It's not physical product, then it's like a global.
Okay, let me ask a question differently, guys. So if somebody is saying that there is an opportunity for to do a certain startup to do whatever product and ship it, or based on today's input, the question is hold it, because we don't know how the tariff system will look like in a couple of weeks or a couple of months, or continue as you are if the business did not start. This is my question. I go to you, Palash, first, and then we go to Salah. So if I have the money still in my pocket, I have a startup that I was working on, there is some development happening, we were working on something, based on the new tariffs that are all over the world, the big companies are already panicking. They don't know what to do. Apple, we are hearing rumors, Apple Flow, I don't know how many, so I don't mention names. So a certain company, Flow, how many aeroplane with products one day before the tariffs was announced. Another company we just heard of Flow, I don't know, from China, how many aeroplane. Another one from India, how many aeroplanes before. Question is, if the big companies are panicking like this, they don't know still what to do because it's still very foggy.
Yeah.
If somebody has the cash in the pocket, should I go and do, and I was planning my startup, should I go and do it or I put it on hold?
I would say if the idea is in the brainstorming part and you know what you want to do, yeah, but you are looking for the right opportunity, I would say currently hold it if it needs a lot of investment in the beginning itself.
Yeah.
So don't put it in a market where you have no clarity about how the tariffs will work.
Yeah.
Maybe if you already have a good idea, hold it and see that if the idea is good and it is global idea, it can be implemented from anywhere.
Yeah.
So hold it and maybe start it when you have a clarity that, okay, maybe this country is not correct for me. I can go to this country, implement the same idea, but have a better return on that.
So your recommendation now, if there is no investment took place or still at the early stage, hold it.
Correct.
Saleh.
Well, I think what Trump is thinking of is going to happen. Okay, he is against China. He's gonna take the business out of China. So I would just go and check what are the business that we can localize in other countries, and then go ahead and do it.
Even if the tariff, with the tariff ambiguity or the unclarity, will still go.
Yes, because I think even if he reach a deal, for example, with China, I think it's still going to have he's still serious about getting the business or getting the manufacturing site outside of China.
Okay.
This is becoming a national security issue. So I think he really don't want his destiny to be controlled by Chinese people.
Very good. Guys, this is bringing us to a closure. I just want to summarize quickly. It has already, believe it or not, has been already an hour. I'm very thankful for you guys. I will summarize it very quickly. It's definitely a crazy time for everybody. A lot of volatility. I think we will have some fun. I want to underline, and as per the disclaimer, there is not a recommendation from any of you guys or from us for anybody to do anything. It's a discussion that we are sharing with a lot of experience from you guys over here for what you would have done personally if you will have this, or as we are all going through. And we have shared completely two different, not complete, but different approaches. One approach, Saleh say hold the cash. You're saying no, keep the money, for example, and don't invest further. Saleh is saying wait, don't invest anything till you get the stock market going up again. You start getting in on your ride the train when it's going up. The trend is our friend. So this is what we always hear. On the investment, one aspect you're saying, Palash, on this case, say hold. Saleh saying no, invest if you know it. But you have to be selective in which market because the tariffs will happen. With this kind of approaches, I will put on top as well what you feel comfortable, guys, with to do it. I know friends that they are getting cash, getting prepared to get in, even if the market will go down. They are getting the cash and they are getting in the market even from now, despite, for example, getting in every day a little bit, and they are clear that they will have some fun. I don't think we will stay years. I think it will be maybe a little bit less. I think it will be something between the 2008 and 2020, but it's definitely not a week's time. I think it will be longer. I want guys to use the opportunity to. I think we landed to decide to do this very quickly. I'm very thankful for you, Saleh. In one sentence, and maybe I give you only 30 seconds. One sentence.
Oh, well, just for the traders, I'm not worried. The traders know what they're doing. They're going out whenever the market is going down or they are shorting the market. So, but just for investor, try to get out and try to move something to gold. And we have not seen the end of it yet. I know that he gave a pause of 90 days. It doesn't mean that he eliminated the tariff. There is, even if it's only China, this will have implication. And now he's having 10% across all countries. Even if he reach deal with something, the world as we know it right now is not going to become the world in the future. So get this into your benefit. crisis makes fortune. Think how can you benefit out of this.
And the market started already and it's deep red. So today already.
Okay. I'm not surprised. It's a bear market rally. What we have seen is a bear market rally, and we'll see this a lot in the future. So that's why. But the general trend is downward.
It's down. Yeah. Balash, in 30 seconds. Anything final thought you want to share?
I would say my thought will more towards the common people who have, let's say, lost or see that they have lost a lot of growth. So don't panic. Don't do panic buying or panic selling. Just relax. Take the market as it is going. If it is already down, in my opinion, just let it be. Forget about it. Take a good
Focus on
sleep.
other stuff.
Yeah, exactly. Focus on other things and maybe focus on the sectors or let's say where you want to invest more. Yeah, and diversify. It's always better to diversify.
Okay. Thanks a lot, Balash. Thanks a lot, Saleh. I sincerely thank you guys. We did this very last minute based on the request that we got from our fans, from our followers on the Career Akhdar. I appreciate it. I leave this, guys, for you to decide. As I said, there is no right or wrong. We do not recommend. It's up to you to decide where you want to. We just shared sincerely what we are personally thinking, what we are personally doing, and then we brought Saleh and Balash for a reason, so they can share it not complete, but as I said, different perspective. Remember, you have to find the way that will make you sleep at night properly, because we know a lot of people can have really hard time if they don't know which approach. You can get a fortune and then have a heart attack. It's a different, which we don't, inshallah, بعد الشر عن الجميع. So with this thought, guys, I'm very thankful again one more time. I leave you, Balash, to enjoy Frankfurt. It's very sunny today, so better we go out and enjoy. Thank you, guys. Thanks a lot. Thanks, Saleh. Thanks, Balash, one more time. وكاريركم أخضر وربنا يسترها. Thank you, guys. Appreciate it. Thank you, guys.
Thank
Thank
you.
you, Mustafa.
Thank you.
Thank you.